Frustrated by international gridlock, TMC is essentially abandoning international bureaucracy and pivoting completely to American shores. Welcome to Earnings Unscripted, where we are digging into the metals company, ticker TMC, and their fourth quarter of 2025. Today is March 27th, 2026, and I think we have a lot of ocean to cover.
Yeah, that is a nice way to say they are rewriting the entire playbook.
Exactly. And just a quick reminder for our listeners before we dive too deep, everything we talk about today is strictly our personal opinion and not financial advice, so please do not go buying offshore oil rigs based on our chat.
Right. Leave the scrap metal scavenging to the professionals.
Fair. Okay, so a really quick flyover of the quarter. They are a pre-revenue exploration company, so we are mostly looking at cash burn here. Net loss was $40.4 million. That is, wow, roughly a 78% improvement from the $184.5 million they lost in Q3. Operating loss narrowed 19% to $44.7 million, and EPS was, a loss of 8 cents a share compared to a loss of 46 cents last time. Miro, how are you reading these numbers right out of the gate? The stock did not exactly throw a parade today.
No, it definitely did not. I mean, the stock had a ton of volatility during the quarter, but today it just faded. It closed the regular session down about 5.53% to 427, and then the after hours was completely flat, basically dead quiet. And honestly, the muted reaction makes sense when you look under the hood.
Because the massive net loss improvement is not exactly real operational leverage, right?
Precisely. The enormous Q3 loss was heavily driven by a $131 million fair value hit on a royalty liability. That did not repeat. So it's not like they suddenly found magical efficiencies. They just avoided an accounting crater this time around. But the metric that actually matters right now is liquidity. They're sitting on $117.6 million in cash.
Which is actually up about 2% from last quarter.
Exactly, thanks to some interest income and that royalty spinoff deal with the metals royalty company. But the real story, the absolute crux of this earnings report, is the complete jurisdictional pivot. CEO Gerard Barron basically said they are done waiting for the International Seabed Authority to figure out its rulebook. They want the certainty of the U.S. regulatory regime.
And they are putting physical roots down to prove it. They secured exclusive rights to negotiate a lease on over 1,400 acres in Texas, the port of Brownsville specifically. They want to build a massive nodule processing plant right there.
Which is wild when you step back. A nickel processing plant has not been built in America in 80 years. And TMC wants to do it at an accelerated pace using an ex-Tesla battery executive and AI engineering software. They are explicitly trying to clone that SpaceX execution timeline for heavy industry.
I do love the Silicon Valley meets heavy industry crossover there. But the part that really caught my eye was how they plan to get the actual collection ships. They're not building shiny new submersibles from scratch.
No, they are scavenging.
Right. Barron just casually mentioned watching offshore drillers like Transocean scrap 4 giant drill ships for really cheap money. TMC is just planning to buy dead oil rigs and convert them.
It is a brilliant survival tactic, in a historically capital-heavy sector. Finding cheap tonnage that already floats and just retrofitting it is pragmatic, but it all hinges on one ticking clock. Management expects their commercial recovery permit from NOAA to be granted within the next 12 months. If they do not get that federal green light, all the scrapped ships in the world will not matter.
All right, let us get into the details on that permit timeline.
Right, so the 12-month clock. It is not just an administrative wait. They are substituting the entire legal framework. They are relying on, actually, it is a 1980 law, the Deep Seabed Hard Mineral Resources Act, DSHMRA, because the UN-aligned body, the ISA, is completely gridlocked.
Which Gerard Barron called out directly. He said, instead of the uncertainty and gridlock of the ISA, we chose the certainty and clarity of the U.S. regulatory regime. I mean, he's not exactly hiding his frustration.
No, he's not. And honestly, he should not. But look at what is actually happening underneath that statement. They are not simply switching filing offices. They are
essentially rebranding from a deep-sea mining startup into a U.S. national security asset.
Oh, because of the defense consortium thing.
Exactly. They joined the Defense Industrial Base Consortium, which unlocks federal defense funding. And during the Q&A, analysts were pushing management on whether their undersea tech is being evaluated for military operations, like autonomous underwater vehicles.
Geez, autonomous subs? What was Barron's answer to that?
He was incredibly evasive. He just said he wouldn't rule them out, which in CEO speak usually means they're aggressively pitching it to the Pentagon.
That is such a massive identity shift, Miro. One minute you're supplying EV batteries to save the world, and the next you're exploring dual-use military tech for the government. It feels a lot like a survival reflex.
It absolutely is a survival reflex because you have to look at the master plan for that Texas processing plant. The filing explicitly notes the ultimate decision is likely conditional on financial support from the current administration.
Wait, so the Texas refinery is not a done deal? They have the land rights at Brownsville, sure. But if Washington does not write a check,
then the plant is a mirage. The whole pitch of building the first American nickel processing plant in 80 years is brilliant marketing, but it requires heavily subsidized capital. If Washington says no, they probably have to ship those nodules back to Japan for toll processing, which completely kills the domestic supply chain narrative.
Okay, yes. So the SpaceX level execution speed we talked about earlier relies entirely on a government safety net. It really makes you wonder how much leverage they actually have in these negotiations. They claim they can single-handedly solve the American supply chain dependency across 4 key metals, but they need the government to blink first.
Right, but they are bringing a massive amount of homework to force that blink. To get that NOAA permit, they didn't just hand over a typical environmental impact assessment. They submitted documentation backed by over a petabyte of scientific data. Craig Shesky called it the largest environmental data set in history.
A petabyte? Okay, that is just absurd. That's 15 years of just tossing sensors into the Pacific Ocean.
It's a data war. Environmental pushback is their biggest existential risk. Overwhelming regulators with a petabyte of telemetry is basically a brute force way to prove they know exactly what they're doing down there. Or, well, they have the data to argue they do.
Yeah, good luck to whatever poor NOAA intern has to download a petabyte of seafloor mud data. So with all these massive geopolitical bets on the table, where does this actually leave their trajectory heading into next quarter?
It leaves them playing a very expensive waiting game. Management projects they will finish Q1 of 2026 with roughly $110 million in cash.
Right, which is, it is a solid buffer for now, but not exactly build a refinery money.
No, not quite. They are basically stretching the runway while the clock runs down. Craig Shesky was pretty direct on the call. He said based on their progress, they now expect the grant of their commercial recovery permit within the next 12 months. That 12-month window is everything. It is the entire ball game.
So if Washington drags its feet, this all just turns into a petabyte of really expensive ocean trivia.
Exactly. And that is why investors need to be realistic about the downside here. Share counts already crept up to around 423 million this quarter. Shesky explicitly noted they intend to refresh their at-the-market facility at some point, so dilution is, well, it's firmly on the menu if they need to buy more time.
Okay, yes, but what about the actual physical milestones beyond just lobbying for permits and surviving?
Well, offshore, they are expecting a finalized commercial operating agreement with all seas, basically any day now. And Barron is still holding the line on Q4 2027 for system commissioning. He mentioned they want to hit commercial production in early 2028 with a single collector, then eventually scale to 2.
2028. You zoom out and it's just a fascinating setup. They have transformed from this quirky deep-sea mining company into a massive geopolitical call option. They're hitching their entire existence to U.S. national security.
It is a brilliant pivot, very pragmatic, but there is still a massive gap between pitching a great macro narrative and actually pulling profitable rocks from the seafloor.
Very true. We will see if they can actually thread that needle before the cash runs out. Thanks for diving into the deep end with us today, folks. Catch you after the next call. And hey, if you want these earnings breakdowns to just automatically show up in your feed, you might want to hit follow on the show. We actually use AI tools to help us comb through all those massive regulatory filings, which honestly just gives us more time to focus on the actual human stories driving the numbers. Let us know what companies you want us to look at next by dropping a quick note to earningsunscripted@datamadness.ca.
See you next time.